What is going on, fellow YouTubers, traders, entrepreneurs? I hope you guys are doing phenomenal. Guys, today I'm coming to you with a video on the most basic and profitable trading strategy that I know. This strategy, I've been using it for years. It's been extremely great for me and for my team. I highly recommend that you guys look into using this as a beginner or an intermediate trader. I know you guys are going to enjoy it and catch a lot of pips off of this way of looking at the market. All right, before we begin, I want you guys to go down below and drop a like on the video. Make sure you give this video a thumbs up. Subscribe to the channel so you guys can keep supporting, keep showing love. With that being said, let's go ahead and get right to it. Let's go. Now that we are on the screen, I'm going to go ahead and show you guys this strategy. Very, very simple stuff, family, that we're going to be going over today. I'm going to be leveraging one of my favorite products out there right now in the trading industry. For those of you who aren't familiar with the Harmonic scanner brought to you by I Am Mastery Academy, it's one of the most top-notch trading resources I think that exists out there. If you guys have not accessed this platform yet, I would highly recommend that you use it because this is where this basic strategy comes from. Okay, the first indicator that I use here to enter this trade is what I call the Alligator Indicator, right? The Alligator Strategy is what this is called. So you go ahead, you search for Alligator, Williams Alligator. It's gonna pop up 3 EMAs that we're gonna be able to open up here. We're going to leave the inputs the same, but we are going to make these lines a little bit thicker. Boom. And we're going to use these lines to our advantage. And so to kind of give you guys a run through of how the Harmonic scanner works, simple thing, it's just like TradingView. The reason why I use it though is because of the fact that I don't have to set up my own harmonic patterns, right? I can literally come in here, leverage this tool. I can pick a broker that I want to, see. Let's say, for example, I have Hugo's Way. In here, I pick Gbp Cad on the 1 hour time frame, or a 30-minute or a 15-minute. I'm going to look at the 1 hour in this case, and it'll go ahead and give me some details on that market. So usually when there's a pattern setting itself up, a harmonic pattern, that's what I use as an additional confirmation in my trading. Okay, so to really show you guys how this strategy works, I'm going to go ahead and give you a couple of examples on what I'm looking for here. Okay, so first things first, we're going to clear up the RSI from the bottom because we're not going to be using the RSI, but I will be going over the rules. Okay, so it's 3 simple steps. All right, the strategy that I'm going to talk to you guys about today is very simple. It's called the Alligator Strategy. Okay, so we'll put here Alligator Strat, and it's 3 steps. Step one is to identify the trend. Okay, is it upward trending or downward trending? Okay, once you identify the trend, step 2 is identify if the pattern, identify the pattern that is showing up is a buy or a sell. Okay, buy or sell. And then last but not least, the third step is the crosses. Okay, I'm just going to leave it at crosses for now so that we can go ahead and get more in depth into it later on in the video. But for right now, these are the first 3 steps that I'm looking for. Okay, the first thing I need to do when using this strategy is identifying the trend. Okay, for those of you who aren't familiar with the saying, the trend is your friend. If you guys are taking notes right now, write that down. The trend is your friend. I wouldn't recommend trading against a trend because realistically, when you trade against a trend, you don't know how big that pullback is going to be, right? It can either extend itself for a little bit of time or a very short distance, or it can extend itself for almost a full retracement into where you're going to see that market pull almost all the way back to the entry point. So identifying where the trend is going is always going to be your best interest because you want to trade with that trend. So if it's an upward trend, you want to buy. If it's a downward trend, you definitely want to be selling. Okay, so 1 is identify the trend. Step 2 is the pattern showing you a buy or sell. Okay, the reason why I love using the harmonic scanner is because the harmonic scanner identifies reversal patterns in the market, and so reversal patterns are key when the market wants to start going in a specific direction. And so I confirm the market to do what the trend is doing by looking at the trend first and looking at the pattern second. So let me find an example here to go over the first 2 examples. So let's see right here, for example, GBP USD, right? Let's check out GBP USD. So GBP USD right here is showing me a market that is clearly, very clearly upward trending, right? We can tell GBP USD is upward trending. And the harmonic scanner is calling out a buy, okay? If you can see in the scanner, it does call out entries, take profits, and stop losses. In this specific scenario, it does give us that opportunity here, and the take profits are on top. So clearly, we're looking at a buy opportunity. So if I see an opportunity like this where I see a buy entry, because of what's being called on my harmonic scanner. And in addition to that, it's also going with the momentum of my trend, which is in this case clearly an upward trend. Then this is going to allow me to go ahead and proceed to step 3. Okay, step 3 has to do with the crosses. All right, guys, and so I'm going to discuss the crosses right here very, very quickly before I get too in depth into it. So I'm going to drop down to a smaller time frame, to the 30-minute time frame. And what I'm going to do is I'm going to identify the things that I'm looking for here with the crosses. So the main line that I'm looking for here is the green line. Okay, the green line is our smallest moving average. Okay, these are moving averages. Essentially, what these lines are showing you is momentum and average movement throughout the market. Instead of in candlesticks, you're seeing it in a line. And the green line is the most reactive line or moving average in this set of 3 lines that we have. So I'm always focusing on the green line, whether it's a buy or a sell. I'm focusing on what the green line is doing. So after I've found out that this market is an upward trending market, so we're clearly looking for buys. The second step, identifying that the harmonic scanner is calling out buys as well, right? What I'm going to do next is I'm going to start focusing on the lines and looking for crosses, right? Some of you guys maybe have a similar strategy where you leverage maybe moving averages, and when they cross, you buy. When they cross up, you buy. When they cross down, you sell. This is the same concept, but we're using here 3 different lines. In a upward trending market, what you're looking for is for the green line to cross the red line. Once you see this happening in the market, ideally is when you want to enter the market. So if I see this right here, right, what I would do is I would set a stop loss below my lows, and then I would set a take profit at the take profit points that are being labeled by my market. Okay, and so in this specific scenario, right, it would give you a ratio somewhat like this. All right, guys, it would give you a ratio somewhat like this. But I do want to also advise you that clearly it's calling out for an entry here. Our market hasn't really hit this low or this entry point just yet. So what I would personally do is I would wait, because you see, having a basic understanding of the market, you also see that down here, okay, in this area, we have a double bottom where the market is building up liquidity. So there are orders that are being built up right here that more than likely this market will want to come down and attack to hit our entry to then start riding it up. So this is a little bit of an early entry. I would not personally enter it right now. If I go back to the 1 hour time frame where I was looking at this from, you also see that the green line has not crossed the red line, right? So it does take a little bit of psychology. It does take a little bit of a basic understanding of the market to just realize the fact that, hey, maybe this isn't the best time to enter. If I'm a little bit more patient, I can go ahead and maybe catch a better opportunity with smaller risk. But that's essentially what we're looking for. Okay, let me find an opportunity where we saw a movement like what we were looking for. Let's see over here. Let me see USD CHF. Perfect. So let's talk about USD CHF, right? So let's look at this. Ideally, in this market, what are we looking for, right? Step number 1, we're looking for the trend. Clearly, this is a downward trending market, right? We're forming lower lows, lower highs, right? And so because we're forming lower lows and lower highs, we can anticipate that what we want to look for is a sell. Now, this market right here, right, this pattern that we see, this harmonic pattern, is calling out a sell as well, okay? And this is pretty much what the harmonic scanner is trying to tell me. It's telling me, hey, look, your entry point can be anywhere from here to here. Your stop loss can be anywhere from your entry to this point, the prior high, and then these would be your take profit points, right? I'm loving this trade right here. We see everything that we need. Clearly, the market, if you would have taken it just based on what the harmonic scanner was calling, it would have been a beautiful entry. But we're not looking at what the harmonic scanner is calling. We're just using the momentum or the reversal scenario that's occurring here in our favor, because what we're really focusing on is step 3, which are these crosses. So when we were buying, we were looking for that green line to cross the red line up. On the sell, we're looking for the opposite. We're looking for the green line to immediately cross the red line down, right? Same concept, guys. Like, check this out. If once you start to trade a little bit more, you can start to anticipate moves like this. Like, look at this right here, right? Same thing we kind of saw on GBP USD, where the market had formed a very strong point of resistance, okay? The market had shown a very strong point of resistance, and before this market actually went down, because remember, look here we're seeing that same cross that we want to see, the green crossing the red. A lot of people would be selling here, and if you were to sell here and put your stop loss right above this, the market would clearly come and wipe you out completely. What you want to do is you want to wait for these little points of liquidity to be cleaned out to then go ahead and enter the market. So as you can see, yes, we saw the cross, but we were smarter than that. We knew that the market wanted to target this resistance before it pulled down. And then we went and saw that cross one more time. So in this specific scenario, what I would do is I would go ahead and set my entry point right after this cross happens, set my stop loss at the prior high, and then boom, go ahead and take this trade. So once we saw that happen, we could have written this trade down to take profit one or take profit two. I would always advise to do some twin trading scenarios here, right, in order for you to maximize your opportunities and leverage risk and take potential profit off the table. Once we saw that green cross the red, perfect point of entry. And then once we saw that green line cross the blue line, we can actually use this as a second point of entry. So what I would have done is I would have entered this market one more time, probably somewhere down here when this line crossed, put a stop loss right above it, and then also continue to take these down towards take profit one, take profit two, and take profit three, right? So let's go ahead and zoom out so we can get a bigger picture here of what's going on. But look at this. Beautiful cross is happening, right? Momentum is in our favor, downward trend, selling reversal pattern here with the harmonic scanner, and the crosses are clearly identifying that this market is starting to reverse. So in these two trades, right, after hitting take profit one, the profitability on this entry, we saw about 30 pips that we could have secured off the bat and remove that gain off the table. And then we could have also waited and allowed this market to ride towards take profit two, which on our second entry could have been anywhere from 50 to 60 pips. So we're talking about anywhere from 60 to 100 pips that we can catch on this opportunity simply because of this pattern that's happening, right? We're combining the trend, we're combining the harmonic pattern sell that we are seeing, and then on top of that, we're combining these crosses as three confirmations to enter this market in a sell. Okay, very, very great form of trading in order for you to really, really leverage a basic level of education and not have to complicate the markets too much. Just simply look for some lines to cross, right? If you can go through a basics course and you can identify a basic level of support and resistance, you can learn how to identify a trend, and then you can learn how to use these crosses, guys. Like, this is a very basic entry level form of trading. And so let's go ahead and look for another example here where the market already kind of developed, right? Let's see. I don't really like this trade right here. If we look at it from the 4-hour, maybe, but realistically, same thing, right? If you're looking at this from a higher time frame, because remember, the markets are very fractal. Whatever happens in a smaller time frame can also happen in a bigger time frame. So you can even use this strategy on the 15-minute time frame as well, right? But this is clearly an upward trend. We're on a pullback, and even though we're on a pullback, this market is calling for a sell. Me personally, I wouldn't enter because if the trend is up and the market is calling a buy, the market is calling a sell. That's opposites, right? One thing is telling us to buy, the other thing is telling us to sell. Yeah, maybe we might see some type of pullback here. Okay, we maybe might see some type of retracement towards any of these levels, but there's no guarantee. And I wouldn't like to risk my money in a scenario where the odds aren't really in my favor. So I would not be taking this trade because the trend is up and the harmonic pattern is calling a sell, which is not what we're looking for. We would be looking for a buy. So I would just go ahead and ignore this right here. Let's see if we can find another opportunity. Perfect. Let's look at GBP Cad, right? GBP Cad. So look at GBP Cad. Great example, right? Here's a perfect learning opportunity. The market, what is it doing? It's forming lower lows, then it's forming lower highs, then lower lows, But then, right, what do we see? This market break our lower high. So now this is indicating for us a possible reversal. So in this case, when we allow the market to just move out and then we see this point that's happening, what are we going to expect? A possible higher high. So not only do we have a confirmation, okay, not only do we have a confirmation that the trend is reversing because of what happened over here, right? But we also have a confirmation based on the fact that the harmonic pattern is calling a reversal. So imagine this trade, right? Even if you just took it off of the harmonic scanner, what a beauty this one was. You'd be up extreme amounts of pips, but check this one out, right? This is what the harmonic scanner is calling out. So entry here, stop loss here, boom, at about 40 pips, take profit 3. We're looking at over 200 pips on this trade and already secured at this point over 170 pips on GCAD. So this is a beautiful trade just off of the harmonic scanner. But let's look at it with our strategy, right? So we already identified that this trend looks like it wants to reverse and go towards from a downward trend to an upward trend. On top of that, the second confirmation is calling a buy with our harmonic pattern. So now let's get really up close and see this opportunity. Okay, what is this opportunity presenting to us? Well, on the 1 hour time frame, right? On the 1 hour time frame, what do we see? Well, we see this market do exactly what we're looking for it to do. The green line crosses the red up, right? Because we're looking for the buy. So the green crosses the red up. Once we see that happen, we can enter the market. Boom, set our stop loss to our low back here, okay, just for that little safety net. We're looking at about a 40 pip stop loss, and then we can go ahead and extend for our take profit. And then once our green also crosses the blue line, this is the second point of entry right here, family. So this could have even been a second opportunity where we could have set a stop loss right here below this low and extended it towards our take profit zones. And if we were targeting take profit 3, we would not have hit it. The market definitely had to cool off a little bit before it would continue back in that direction. But check this out, right? Look at this. Market did go ahead and hit our take profit 2 and even pushed a little bit further beyond that. This right here was a cool 110 pips to clear. And then on our second entry, we went ahead and we secured a good 90 pips. So just between these two entries right here, guys, 200 pips on GCAD, guys. This can be, either $2. It could have been $20 on a penny lot. It could have been 200 on a 10-cent lot. It could have been $2,000 on a $1 lot, guys. So imagine what this trade right here could have generated you if you actually went ahead and took this trade. No matter the risk, right, or the lot size, I mean, the risk to reward here is beautiful. A nice 2-to-1 setup on the second entry, a beautiful almost 3-to-1 setup. And if you would have just been patient with this market and allowed it to go up, I mean, the sky is the limit here, guys. A 5-to-1 risk to reward ratio. What I love right here, though, is the fact that this entry just completely smashed through, and we saw take profit hit in about 1, 2, 3, 4, 5 hours of holding this trade, which for me is a beautiful intraday trade that I think anybody can take advantage of and seize. And so, guys, this is the simplest, most profitable trading strategy that exists out there right now in the Forex industry. If you guys like this strategy, go ahead and drop your thoughts in the comments. I want to hear from you guys and your opinion behind what you guys think about this strategy. Do you trade harmonic patterns? What strategies do you guys trade? I want to kind of hear from you guys some feedback, because me personally, man, when I first started trading, this was my go-to strategy. As I started to develop as a trader, I started to find new strategies that I could take advantage of. But I always like having at least 1, 2, maybe 3 strategies that I can develop over the course of a year and stick to those profitable strategies in case one opportunity isn't showing me something and another way of looking at the market is. I can always lean on all these different ways of understanding and identifying opportunities in the market, guys. So, I hope you enjoyed this video. I hope it was, an extensive breakdown that you guys learned from. And, we're definitely going to keep bringing you guys more content just like this. So I appreciate every single one of you guys. Once again, don't forget to subscribe, to go ahead and give me a thumbs up on the video, and like I said, leave a good comment just to support the channel, guys. I appreciate you. Progress with Puello out, guys. Take care.